this bad boy. All right, so welcome to Sunday Q&A market prep with the QuantData team. Run these every Wednesdays and Sundays for you guys to ask questions, for us to look at the data together, for us to just navigate the market and prepare ourselves, right? Because what do we always say here in QuantData? A prepared trader is a real trader. An unprepared trader is just a gambler, right? And I'm pretty sure that's not what we're here to do. Unless it is. I know some of you guys are here to gamble. Y'all don't gotta admit it. Y'all don't gotta admit it to me, but just know. From what I see in the chat, I see it too. I know who's here to trade for real. All right, so for Friday, I'm gonna go over a little bit of Friday's price action. How did we do on Friday? Who is green? Who is red? Obviously, I had a fantastic week last week. I think you guys know that. But for you guys, who was red? Who was green? Hopefully, the most important thing I always say is if you're red and you are still, adamant on trading the market, just make sure you journal. Make sure you look back on what caused you to be red, right? What happened? Because I feel like not enough people stress the importance of just kind of journaling your trades. Because you need to know in what market environment you perform the best in, right? In what market environment do you perform the best in? And once you have that market environment, you have to have the confidence to go in on it. And to start buying up. So Friday, we didn't have a whole lot. So if we actually look on Friday's range, so 62.39, let me actually do it here. So this is Friday, just this from right here. We're starting from right here. Let me change this line to a yellow one, maybe an orange one, might be a little easier to visualize. But that's Friday. So low of 62.37, high of 62.68. Now, that rip back up, that was probably a much better trade, right? I know a lot of people were saying, oh, we should fill this gap, come up back to the closing price. I think, as of right now, this is your Monday, Tuesday, Wednesday, Thursday, and then finally Friday. It's not unheard of to let the market settle. We know the three phases, right? Accumulation, manipulation, distribution. We're probably in a spot where a lot of accumulation is happening. We usually see a lot more hedges come through in the market, right? I know some people were in awe after seeing a big whale buy 600 puts on SPY, right? Targeted for next month. Either that guy is crazy and he's actually going to be very correct, or it's a hedge. I'm kind of leaning towards that some of these orders that we're seeing is a hedge, because we've seen this all-time highs before. Look at the market in the past. We've seen these all-time highs come through before. Ooh, that's not really good. And every time we do hit all-time highs, there's going to be some orders on the downside. Some of these peculiar orders that might lead us to think that, does this guy know something the rest of us don't? I'm just not inclined to believe that yet. And I'm going to show you why I believe that. So Friday's price action, again, very, in the middle of Monday, Tuesday, this whole week, we just kind of traded within it. The levels that we should probably be paying attention to is a break of all-time high, very obvious, right? 6,300 is still our primary target for end of July, so July 31st. Whoever is still picking up those contracts, the whale that did so, pretty confident they're still looking for it to get to becoming in the money. So 6,500 is quite a moonshot. But 6,300, we continue to see this strike be picked up on multiple dates. On the downside, 6,200, you can see that on the Monday, we pivoted right at that 6,200, 62.01.01. That was the low of the week. And that, to me, tells us that this is probably going to be a really big psychological level. I know the market right now on futures side is already taking a little bit of a downturn. We'll have to see how we open. Personally, I like to focus on just all the levels that come through on the cash session. So during the New York Open, everything that happens overnight can be erased so quickly. So we're only going to pay attention to that for now. So these two levels, 60 to 90, and then 60 to 100 flat. There's about 90 points range. And we're going to be generally targeting the 60 to 90 and then upwards to 6,300 flat. And then eventually, again, 6,500. That would be, I mean, so far we've seen that every dip has been picked up. Every dip has been bought. And I don't think it's time to bet against that just yet. So we're going to go through here. So this is the data on the, well, let me actually zoom this back out to session date. We're going to do the 11th here. So we know that ABJ went long and strong on that Friday, right? Now, who had troubles believing in the long during, well, when I went long? Who had troubles? Show hands. Well, if you did, I will say that it wasn't the easiest trade. It definitely was not the easiest trade, but with the data, we can front run some things, right? So this is just right around open, right? 651, 647. So I want to show you why we decided that this is probably going to be the time to pick it up. So 647, you can see that we dipped really hard right at the open, right? It's from 6:30 a.m. all the way down to 6:45. I can show you what the data looked like there. So everything looked pretty bad, right? We were in a spot that it seemed like shorts were the way. 6,200, that was a huge level. But we know that right here, why I didn't want to take the short was one, kind of already missed it. But second, we were already kind of butting close to the 6230. Now, what do we see here? Some long deltas, right? If I were to short this from the open of 6250 to potentially get to this 6230, now there's a bit of a gap on the gamma. From 6245, we went to a low of 6239. This one being the next magnet, it's not leading me down in a staircase manner. This is kind of what I like. So if we were to follow through with that downside, I kind of like a staircase style look on gamma, right? So it has to kind of look like this. What this kind of shows me is like we're leading. So let's say we're trading price action right here. Now every candle we have, one gets exponentially larger to get us to this sweet spot of 6,200. But what do we have in front? So we have this 6245, and then it's a big dip. It almost kind of looks like a pothole, but not really. That's because it's still short deltas here. And then we have this. So what do we have? It's not smooth, right? Doesn't look like this. Doesn't look like that staircase style. Right? Obviously, if it's bullish, it's going to look the other way. But it doesn't look like it, right? Ooh, why does it look like that? Very different profile. And then as soon as we get around here, it just didn't seem like the risk was there. Because we start butting heads with some of these potholes. 6230. So 6,200, but these need to flip in order for us to get to that 6,200. 6,200 was also quite bullish. Right? So I thought that maybe it might be a better time to just let the market settle, do its thing for a little bit, and then we'll take the next trade if we have a pullback and then come right back down. But then why we went long was actually right here. So if anyone remembers, about 30-ish minutes into the market open, 7 a.m., we had this net drift cross. And this was quite a buy up too. So from negative 500, show you right here, from negative 500 on call side, juicing up to 1.27. So that's quite a bit of calls that they've had to buy back in order for us to push up. So at this point, we thought, okay, I think it's time to maybe front run the data. And so I'll show you what the data looked like at 7 a.m. Because at this point, I told you guys that this was interesting. Some of these short deltas are starting to buy back. And we start to firmly sit inside a gamma bullish zone. Right, so look, so the data is dynamic, right? This data, it's going to update in real time. Every second, things are changing. And so you need to really pay attention to see at what point in time you think things are going to be okay. Now, I only took one long contract on that day, on this Friday. I didn't double down and start going with two or anything like that. Again, the reason was this was kind of front running. I wasn't that confident in it, but I did want to get a trade in here. So what do we see here, especially on the delta profile? What did we see? What changed? Now, we had all these shorts coming up towards C230, right? So let's go back to the open again on delta. Right? So this is where we were, and then every minute that we go by, look at that. Look at what's changing. Okay? Look at that. From 6:45 a.m. to 47. So in 2 minutes, someone started to try to long this 6250. Now that was quite a bit of deltas to buy back. At the same time, you can see on the net drift at 647, what's happening at 647? Right there. Right, so you got to use all of this together. So right at 647, we see a spike up on these calls. Really quickly, that negative 500 becomes neutral, and then positive, and then eventually over a million. Now we introduced the alerts now on net drift crossover. So this was awesome. This alert right there, when we got that alert that calls and puts were converging, that also gave us the confidence, right? This is a trade we love to take here in QuantData. I know someone's asking about the net drift filter. I'm going to go ahead and share that right now, and you can take a picture of it. So this is my net drift filter, and then I'm going to show you on Twitter the reasoning. Now it's really important to understand the reasonings behind every filter or everything that you do, because if you're just going to copy and not really understand why, you're not actually learning for yourself. So this is the entire filter for the SPX. Also take note of out of the money and 0 DTEs. And so yeah, I believe it was one and done. We didn't really do much after that. That was the one trade we needed to take us to $600 on the day, and then I think we kind of called it from there. At some point, I think next week we might see a little bit of a harder time trading, but that's why we're here, right? We're gonna try to figure this out together. So levels again: 6290, 6300, 6500, and then 6200. Those levels are going to be really important for us. So 6200, 6290, 6300, right, and then 6500 end of July target. I want to show you guys how to forward look with the Greeks. So we're going to have to remove the date. No. So take a look at, this is what the data looks like on the delta side. We're going to ignore the Vanna and stuff, but this is what I like to see often. This is what I like to look at often when we're deciding that whether the what's ahead of us is going to be important. We're going to ignore the 6,000 long delta, because this is probably really deep in the money, and then it's probably going to be something that's primed for way later down the road. in the money at this point, we just know that okay, we're just probably not going to likely break 6,000. 6,000 it seems to be a point where everyone wants to be long and stay above in terms of price. But if we start to go forward, we start looking here. Now what do we see? See a little bit of short deltas in front of us, but overall, you can see that 6,500 is pretty strong. If I start zooming into the 7,000s, there's actually some interest there. Right, so looking forward, this is telling us that generally people are long. Generally people are looking to have the market grind up. I know analyst targets for end of year are now 7,000 SPX. I don't know if that's going to happen, but so far, so long as I see these longs, I'm going to be interested in buying up any dips that we have. Now, if we look at exposure by expiration, this is another one that's really fantastic because we can see at which date actually shows us who's long. So focusing on a delta, as it's the primary Greek, we can see the July 18, right? This Friday, generally people are long. What interests me more is actually this one right here. So what do we see here? This is December 19, end of year. This is the last OPEX that really matters for the market. Look how long people are here. Right now, if we start to digest all of this information together while we're at these highs, these all-time highs, does this kind of give us confidence that the market's going to continue going higher? For me, I would say yes. I've been doing this for a long time. It always seems that there's going to be some sort of doomer talk that someone is going to, catch a big wave short or, tsunami's going to hit the market. I don't believe that so far, so long as I see this, because we've seen these flip before, right? We've seen these OPEX dates flip before. Take you back to yen carry trade. Take you back to recently in, April, when the market took a big nosedive. Yeah, these were red. These were red and people weren't willing to, it didn't look like people were willing to buy things back yet. They didn't turn green again until after that Trump tweet that he said this is a great time to buy. So again, so long as this remains, we're going to try to buy up every dip. At least I'm going to try to buy up every dip and try to sell puts. Sell puts and accumulate shares where I can on individual tickers that I find that there's some sort of strength in. So zooming into this week, what we're thinking about is, what are we looking at this? So let's go to Forex Factory really quick. So obviously not a light week in terms of news. Tuesday is when things start to happen though. So Monday, we've had days like this where Monday, where there's no news, right? We either get a surprise trend where there's just no opposition, or we get a nothing burger where we just kind of continue to consolidate. Now again, the S&P has already been consolidating. There's no real interest for me until I think we see a break of these two levels. So if Monday does nothing and we just trade within this, we might try to scalp it a little bit, but we're not going to shoot for the stars and go heavy with 3 or 5 contracts or anything like that. We'll probably just take ones and see how far they go. So again, nothing for news on Monday, surprise trend or nothing burger. I'm personally leaning towards a nothing burger, but we'll have to see. Tuesday, core CPI, pre-market. So this is going to be something that the market's going to have to digest during the intraday. This happens an hour before the market even opens. Same thing with Wednesday. And then Thursday, everything's happening in pre-market. Doesn't really look like we have anything important that's happening intraday, except for a little bit of Fed speakers. So FOMC Barkin, FOMC Barr. We know that as of late, FOMC member Daly has been saying a lot more, giving a little bit more of a outspoken opinion. So maybe we'll give this one a watch on Thursday. But other than that, we don't really have too much for the Monday. It's really intraday. Everything's happening pre-market. Something that we like to do for these pre-market events is taking the high and the low and the 50%, so halfway point of these candles, to see if any of these, let's say PPI or CPI pushes us up. Let's see if we revisit some of these levels and where it would go from there based on gamma. So let's say CPI pushes us up, and then during the New York session, right away we start closing in on that news. We start to move down in price action. If the gamma and the delta support the low of that CPI in terms of if it's bullish, it's usually an automatic entry for me and for some of us to actually go long off that level. So we'll have to see. I think that's really important. So again, we're taking the high, the low, and the 50% of any of these big pre-market news events. In terms of earnings, I think there's going to be a little bit on the Tuesday as well. So here's Tuesday. Some bank earnings and well, BlackRock, but I think these are going to be really important to pay attention to. I know some of us are eyeballing ASML, but I think these ones are going to be a little bit more important. Aside from that, we have some chips, TSMC. I'm kind of interested in this because I have a lot of Soxel. Netflix, that might offer us some opportunity as well. But overall, I think the Tuesday before open, especially with the start of the news too, that's going to be interesting for us. So we'll keep our eyes peeled. So all in all, generally pretty bullish. I'm going to cut the recording here shortly, but this is what I wanted to show you guys. Mainly, how to forward look with the data to tell you if we should be buying dips or if we should be starting to risk off and hedging everything. I mean, you should be hedging anyways. I know some of you guys in the chat know that we love covered calls, doing weekly covered calls to just protect our positions over the weekends, especially during this Trump era. We don't know what he's doing, right? We don't know if he's tweeting something on Sunday to just destroy everyone's portfolios, right? So yeah, if you're running the covered call strategy with us, big thumbs up. If you're not, start to look into putting covered calls on. Sometimes it's pretty great to collect a little bit of premium as a just in case. And if things get called away, it's okay too. Now we got the recording really quick.